Samar, let's start with a very basic. Nobody in India can or is equipped to go out and buy a house by themselves. They definitely need an advisor, a broker, or somebody to help them to do that. So I think the first step would be, how do I go out and choose a right advisor?
You know, Manisha, a couple of years ago, you didn't have many options. You went to the neighborhood broker. Today, things have changed dramatically. So you can educate yourself on the internet. There is lots of options of right advisors and brokers. There are many professional companies who are professionally trained in doing this now. So apart from looking at the internet and doing research yourself, finding the right advisor is very easily available either through the internet or looking at newspapers where there's advertising or even word of mouth. But what's important is to work with a professional advisor and not just work with a normal broker or a grey market operator where people get into trouble.
Ideally, how would I go about choosing a professional broker?
So a couple of things. Referrals is a big thing. So one, look at referrals and always get 1 or 2 referrals before you choose an advisor to make sure you're in the right hands. Number 2, try and deal with a company that has credibility, has a large footprint and can give you lots of expertise. Number 3, trust your instinct. When you meet someone, if you feel confident and comfortable in the way they deal with you, these 3 factors are the most important things in choosing a right advisor.
All right. There's a sense that people have that if I go to a large company, I'm going to be lost. I'd rather go to a small broker who would give me very customized service and would just know my needs better, would know the locality better. Is that a myth?
So, you know, Manisha, it's a mixed bag. There are some standalone brokers who do a great job of advising customers and they've been in the business for a very long time. But also there are some fly-by-night operators who give the market a bad name. So it's very important to make sure that whoever you deal with has been in practice for a long time, therefore has a good reputation, which comes back to my point about referrals. If someone pushes you too hard, oversells, doesn't tell you the negatives, only the positives, paints a rosy picture, that's when alarm bells should go off.
All right, that's very, very sensible advice. Finally, what do larger organizations offer in terms of even after sales service? Are there things that one can expect from them?
You know, the business has changed a lot now in terms of real estate advisors. They offer a whole range of services and largely you'll be surprised to know these services are free for customers. So the free services that customers can expect are help in choosing the right property, all the advice on how to buy the property, things to watch out for from developers and make sure you don't get cheated or you don't sign up for something you're not prepared for. Help with deciphering the fine print, what is right, what is wrong, what you should be looking out for. After sales service, making sure your possession is hassle free. All these services, you can even add to it tax advice, legal advice. This entire range of services, the modern day advisor must offer customers and it's widely available all over India to get these services free of cost.
So one is saying that demand all of these, figure out whether your advisor can give you all these, is capable of giving you all of this. If not, then it's better to stick around with somebody who's professional, larger group, and pan-India presence. Does that make a difference?
Well, I wouldn't say a pan-India presence is essential, but it does, yeah, but it is a way of assessing stability of the organization of your advisor. So if they've got offices all over the country, you know that they are a proper established business that will be in business for some time. So your investments are secure through them. So it's an advantage.
Samar, thanks very much for telling us what we should look for in a smart advisor.
Thank you.
Samar, buying a property, land, apartment is not an easy task in India simply because things are not so transparent. They're mired in controversies. There are 8,000 developers across India. There are professional and the not so professional developers. So let's come to something which is extremely important. It's paperwork. It's a little, let's say, pedantic, but extremely important for our viewers to understand the title and the developer. So how do you go about making sure that these things are clean and perfect?
You know, Manisha, this becomes very important for people to look at because even if their projects get delayed, if the title is clear, they will always benefit in terms of appreciation. So even delays are not a problem, but titles being problematic is a big issue. The ways to do this is, first of all, to actually ask to see the land title, specifically yourself. The second thing you must do is look at what is the state government's policy where the project is located. What is the state government's policy for allotting land? For example, in Noida, which is in UP, you will find that the developers have to pay over 10 years. So they haven't even fully paid for most of the land parcels. So that is something the customer should be aware of. So examining title, looking at these 2 or 3 things is very important, and the whole legality of the process. So after title, they must examine the conversion documents to make sure that the land has been converted for a commercial development or a residential development. And the third most important thing to look at is whether the plans have been sanctioned or not. So if you look at the title ownership, that the developer has land title, then you look at his conversion rights where he has the right to build a high-rise residential or a commercial complex. And the third would be to make sure that the actual sanction plan which allows the building to come up in the way that it is proposed is also there.
So rightfully, when I'm going to buy an apartment, I can ask the developer for all these 3 things? And he should show me the document?
Not just rightfully, most professional developers and what we call new age developers volunteer this information because it gives them an edge over their competition whose paperwork is not so good. So you know you're in safe hands if the developer is happy to share all these specifics with you.
Several times, projects are pre-launched without all the requisite clearances and developers do that. It's quite rampant as a practice. How do you ensure that you don't get caught in that trap?
So let me explain what pre-launches actually end up being. They have title clear on the land. They have the right to build, which is land conversion. So a CLU, conversion of land use, is done. Those two things are always done, even at the stage of pre-launch.
Right.
What they don't have necessarily is the last approval, which is actually the building sanction plan. Now, in some cases, there's a lot of appreciation in pre-launches, so customers get tempted. Our advice would be that you should try and wait till the project is properly launched. But if you do want to actually experiment with the pre-launch and take that gamble, extra risk for extra reward, then you must make sure the first 2 documentations, land title and change of land use, those are very clear and you must see those yourself. So that allows you actually to be sure that everything is in place. But if you do want to take a risk where you don't wait for the plan sanction, then you must look at the track record of the developer. And if in the past he has developed projects that were pre-launched and then were regularly launched and were successful, then you know you're in safer hands.
All right, so then let's come to the developer part. There's so much noise around some of the largest developers in the country today, and we do know, without naming any, that there are projects which have got stuck. With many of them, construction work is not happening, though most of them do end up delivering, at least the listed companies, the branded developers. Yet there's a lot of angst when I do not get my home in time and I'm paying my EMIs. How do I track the developer's background? How do I make sure that I'm going with at least a safe bet?
You must check the reputation of the developer and what his past track record is. That gives it away for sure. Second of all, when you meet the developer and you engage with them, you get a sense of whether their way of dealing is professional. Are they likely to look after you? Are they likely to turn their back on you? Are they looking for short-term profits? This sense you must get. And most people who are making such an important decision of buying a home are very well equipped to gauge what the sense of the developer is. So if you trust your own gut and you actually do reference checks and speak to other customers from previous projects, you can get a fair idea of where this is going to end up.
Samar, thanks very much. Interesting topics, title and developer, and why they're so important to check both. Samar, we get tons of questions, maybe hundreds, maybe thousands, where people are just not able to make up their mind in terms of where should they actually buy their apartment. Sometimes, of course, it's their jobs, etc., which will determine it. But give us a sense, what are the basic parameters for deciding what location should I go for when I'm buying property?
You know, Manisha, choosing your location or where you make a purchase is actually a fine art, and it's the most important part of making your decision. So very often people refer to the 3 rules of real estate: location, location, location. Our view is that you should actually look at what the future good locations are going to be and not current locations. People always get confused between, but the best locations are the most expensive, I can't afford them, what do I do now? And the correct way to do this is that look at a plan which is a master plan for a region and look at where the roads are sanctioned but not yet built. And those areas which you know will be the future hot locations is where you should actually look to make your investments. Today it's very easy to examine a master plan, very easy to correlate it with where projects are coming up, and main sector roads in a lot of areas are the areas around which maximum projects get announced. You can be cleverer than the market by making sure you make an investment before the road actually comes up.
But there is this whole sense that, you know, if you're going to use it for living, then you need to have the physical infrastructure in place, you need to have the social infrastructure in place, and those things become extremely important. So does it always work out to look at a very futuristic location? What if I need to move in the next 1 or 2 years or 3 years?
So a couple of things. First of all, you'll find that infrastructure develops very fast the moment real estate projects get announced. You'll find that there is suddenly a barren field, and when the project starts getting built, suddenly all kinds of infrastructure comes up around it.
Okay.
That's one. Second of all, you'll also find that wherever projects are announced, there is usually immediate announcement of other big projects in terms of the actual overall population in that area goes up dramatically. So you can pretty be rest assured that you're not going to be abandoned in that area. The roads will come, the infrastructure will come. So it's quite
The
comfortable.
hospitals will get announced,
all of that
the
gets done.
markets and the
All of
commercial
that gets
areas
done.
will
Yeah,
get
yeah,
announced.
So that becomes very important. And for the point you mentioned about not having enough ecosystem of development around it, never will you find a lag of more than a year or two. And in any case, the projects will take a year or two to come up. So if you make a purchase today and the sector road has not yet come, you know that by the time your project gets delivered to you, the road will be there and the infrastructure will be there as well.
In terms of distances from work, the travel time to work, is that critical as well, Samar?
So, you know, I think that's a very important factor and one must not trivialize that. My view is that you must always look at practicalities of living while also looking at the financial aspects of it. And my view would be that you must buy where your place of work is or close to where your children's school are, because these are the two anchor points which dictate your entire commute times, children's school time and actually your work location. So these are very important points to consider when you make a purchase, and they can almost equal or override the financial considerations. Also, all these areas you mentioned now have enough development in the same catchment area.
Right.
So you don't have to actually travel across the city, because wherever your place of work may be, there is enough development and enough projects being announced in that vicinity. So a little extra work, a little extra research, a little patience, maybe you give yourself a 6-month window to make a purchase, you'll definitely find something which is closer by to where you're working.
So you're saying that even if you need to pay up a little bit more, do look at your place of work and the comfort that you will have in terms of travel time before you take that final decision.
Yes.
Samar, thanks very much. Interesting. Like you said, real estate is all about location, location, location. Buying property is a dicey task. There are a lot of legal angles involved. There are a lot of legal tangles that you need to untangle as well, Samar. So let's start with the basics in terms of what is the paperwork which is required, which will make sure that the property is all clean and yours.
So Manisha, there are various things involved here, because you look at the way property is sold today. It's if the property is ready built up, then it's a pure transaction where you do a registry in your name, the title shifts onto you, and then you own the property clear and unencumbered. However, today real estate is not transacted only when it's fully built up. It's often transacted before it's even launched in the pre-launch phase, or even sold in the middle when it is being launched. So the things to look for is the key important document before the registry is actually the buyer-seller agreement.
Right.
That buyer-seller agreement is a very detailed document, but unfortunately in India, it is largely drafted by developers to protect their interests. And one of the most
Absolutely.
important things that customers should look at is their own vetting and their own rights being protected in the buyer-seller agreement.
It is really important to let a lawyer go through it, and there are specialized property lawyers who just do this. I mean, they look at buyer-seller agreements for a very tiny fee. 10,000, 15,000, maximum 20,000 is all that you need to shell out to get your buyer-seller agreement vetted, isn't it? And it's worth paying that money if you're buying anything for 50 lakhs in a crore or even lesser.
Yeah. No, so if you look at the percentage that is of your transaction value, it's nothing. So you must actually get legal representation on two areas. One is to look at the buyer-seller agreement specifically. Second, to look at the legality around the payment plan. What will happen if there are delays, all the fine print that is related. So apart from the title, sometimes the title may not be in question. If you've signed a buyer-seller agreement, you will get your flat.
Right.
But the terms on which you get your flat, what is the fine print, what are the deposits that become mandatory, what happens if there's an increase in some of the statutory fees the developer has paid the government. Sometimes they pass that on.
Oh, yes.
So the legal
Recently,
representation.
Maharashtra, the VAT,
Absolutely right.
which has got passed on to
Absolutely
the
right.
consumer.
So it becomes very important to look at those, the fine print, as well as potentially increase in prices, whether that has to be borne by the customer or the developer. All of these points are important to clarify.
What about the changes in the specification of the flat per se? A lot of viewers who have written in saying we were given a certain layout of the flat and of the building and of the society, but it has been changed, and unfortunately when they signed the buyer-seller agreement, the developer had already put that in, that he had the right to change the specifications. Is that something one should accept or let it be?
So this becomes a tricky area, largely because very often if you are unhappy with the changes a developer has made, he'll ask you to take a refund. But by then the property value would have escalated so much that to take a refund would actually be taking a loss on the value of your property.
Absolutely.
And unfortunately some developers take advantage of this. So it's very important to make sure that you can satisfy yourself that every change that they are proposing is discussed at length. While you cannot protect yourself entirely, but you can look at whether they have done this in their past projects, firstly, and secondly, what is the potentiality of change. In many cases, I know of areas where there's a land parcel, a project has been announced, and the location on the land parcel where the project is being built has been changed entirely. So suddenly from facing the north, when by the time it's built up, it's suddenly facing the south. And this has happened. So this is another point to be very careful about.
And I think one more important point, Samar, and that's, it's all right. They have very stringent conditions in the buyer-seller agreements if the buyer delays his payments. But when it comes to the developer delaying his payments, what are the clauses which a buyer must get built in?
There's been a lot of progress on this side, especially in the courts and our legal system, and there's been recent judgments by the Competition Commission talking about the one-sided nature of buyer-seller agreements, specifically focusing on the price of delay. Now what happens is that developers try and obviously get away with the minimum payment, and their reasoning is that a lot of factors are beyond their control. Now what happens is that they can, under the guise of factors beyond their control, almost all delays end up being laid at that door, when that may not actually be the reason.
All right, a word of caution there. Samar, thanks very much for outlining all the legal tangles that one could get into and must avoid. Samar, it's great to make money on property. Everybody loves it. But then you also have to pay your dues to the government, which is taxes. So how can you actually optimize your tax or save your tax on property sale?
Manisha, the taxation issue has become far more relevant now because circle rates have gone up, and therefore there is far more money that is being recorded as being part of the property sale than was before because of the black market before. So now tax has become a huge issue, and it is very important for customers to look at all the right tax advice before they actually do their either buying or selling transaction.
Even selling of the existing property,
because
right?
it makes a huge difference in what your tax liability can be. There can be a 10% difference on when you sell your property. You could even just wait 2 months and sell your property 2 months later, and you could actually end up paying 10% less tax by waiting. So you can shift from a short-term capital gains liability to a long-term capital gains liability on your profits. So taxation is a very important element now.
All right, so just explain to us, how do we actually maximize our tax savings in terms of ensuring that we wait A, for the long term, and B, how do we utilize the indexation benefit to make sure that we get our tax calculations all right?
My first advice would be that you must look at a tax advisor when you are actually doing a transaction, because it's very important to get the nuances of it correctly. Every case is specific and is different. Usually when you're selling a property, there is a period, so if it's a 1-year period beyond which if you hold on to your property, then you pay long-term capital gains on that property, on the holding value, and therefore the amount of tax you pay becomes almost half. So the difference between short-term and long-term capital gains can be almost equivalent amount. So 10% extra you can end up paying tax if you don't manage the time at which you sell your property that you have bought in the past. Secondly, the purchase. When you actually make another purchase, you can actually avoid all capital gains completely if you reinvest the proceeds from your previous sale into another real estate investment, which is why you'll find that maximum sales end up happening in March when people are looking to reinvest their profits in real estate to save on tax. So all these things are very important to consider when you actually make either a buying or a selling decision.
They happen in March because they give you an extra time period to invest in, or they give you indexation benefits?
No, the advantage is that if you have made a sale where you have capital gains in that financial year, if you reinvest it in that same financial year before March 31st, you end up saving on the tax on the profit you made on the previous property because you have reinvested it in a new property.
All right. And at the end of it, how do you get the indexation chart? This is the tax advisor who should be able to calculate it for you, because this is not something that a common person should attempt to do. Even though an indexation chart is available on the RBI site, it's still better to go to a tax advisor.
So my suggestion would be you must always work with a tax advisor on taking advantage of indexation, because it's a complex calculation and it's one that can help you save quite a bit of money. And it's linked to inflation, and inflation has been high for the last couple of years. So there's a huge advantage on taking indexation benefit when you actually make a property transaction work for you. So getting the professional advice is very important on that.
And savings could go into lakhs.
Sometimes even crores.
Even crores, depending on how many
What
crores your
you-
property is worth.
Correct.
All right, so that's the tax advantage that Samar just outlined. Samar, very important question. So I have the money to buy, go ahead, use it and buy an apartment or a home or book it for myself. I also have the option of taking a bank leverage, and I do keep getting that question, should I really use my money? Should I sell an old property and buy something new, or should I just take 20% of it, take 80% leverage and buy it? So where do you stand on this?
So Manisha, there's no right answer because it depends on everyone's individual circumstances. But what's very important is that every person who's looking to buy a property must know of all his options. And what I find is that customers are not aware of all the various types of choices they have in which they can buy a property.
Okay.
There's a down payment where they can pay the entire amount and get substantial savings and benefits from the developer when they pay full upfront. There's a construction linked plan or a CLP where the customer can pay and he has the security of seeing his project being developed and his home coming up as he continues to pay.
Sure.
There is the option of having a flexible payment plan where you have a couple of installments to pay upfront, and then you can take a gap in the middle, get a breather, and then pay closer to the completion. So that's an important area.
Developers give
flexible options as well, and those are quite popular sometimes in some geographies in the country. And then there's the option of subvention or no EMI plans where you actually pay a deposit and then you pay no EMI for 2 years. The banks pay the EMI on your behalf, the developer pays the interest on that cost, and then you start paying only when you get possession, which is another exciting opportunity. So there's 3 or 4 ways, and we find that customers very often don't know these options.
They don't.
And when they don't know these options, they end up making a decision.
Most of them, some decide between should I pay in full or should I take a bank loan.
Yeah.
They don't even look at flexi options or subventions that they come, isn't it?
Yeah, and given the fact that property prices rise so much, you could actually use the same amount of money to buy 3 properties instead of 1. And I'm not saying 2, I'm saying 3. You could buy 3 properties with the same amount of money, enjoy profits on 3, which could pay for the one that you plan to buy for yourself in the first place.
My God. So,
So
tell
it's
me
a
how
very
are
important-
we going to get our viewers to do that?
So it's very important to assess all your options. You can, suppose you were to be able to pay 20%, you could buy 3 properties by paying 20, 20, 20 and not have to pay anything for 2 years. And if you're reasonably sure about the profitability of your investment and the right location of your investment, the profits you make at the end of those 2-year period can be used to pay off the loan you have taken on the first property as well.
But
So there's lots of...
It is a risky leveraging. I mean, if the markets turn, because real estate is lumpy, so if you're not able to sell it, you need to know the risks and you need to at least have a backup that if the market turns around, turns negative, you have money in the bank to at least pay the next installment.
So there's a couple of few tricks you can do. First of all, you must make sure you have enough reserves when you adopt a risky strategy to cover if the market was to go in a direction that you don't expect. That's one. The second opportunity that you have always is that you can always look at buying properties that are very well priced and are based on what we call a cost plus model. So there's no fancy premium. There's simply the cost of the land plus cost of instruction plus a little bit of profit.
Where are those properties?
So there's quite a few. You have to work hard to find them, but there are quite a few.
Or we can come to you and find them.
Absolutely. And that's where I find that you can do experimenting with adventurous ways to make maximum profit from your property investments.
Samar, thanks very much. That's a very interesting conversation on how you can actually go ahead, buy several properties and make a lot of money. Of course, you have to be well covered. If the market turns around, you can't take very big risks without at least some cushion in the bank. Samar, glitzy ads, full page, cover newspaper ads, and people get happy about that property, go and buy it, but their experience in terms of sales from developer to developer differs a lot, doesn't it?
I think one of the big changes now that's happening is that after sales service or after purchase service has now come into the market for the first time, and I think customers would be well advised to make sure that they work only with those developers who have a proper customer service department and have proper after sales service. And this can help customers in two ways. First of all, they must make sure that the developer is as keen on looking after their interest after they have made the booking than he is before. Because there used to be a scenario where all these promises were made, and once the booking was done, all of a sudden the whole experience would go downhill. But that has changed now. So it's important to look at after sales service. It's important to assess what is the developer's infrastructure to support the purchase after the booking. It's very important because it's an ongoing relationship. There's 3 years largely for which you will be engaging with the developer on payments, on construction plans, buyer-seller agreement, receipts, visits to the site, documentation, information about project development. So all this is an ongoing relationship, and customers find that they sometimes get very frustrated because the developers seem to be very excited before they do the booking.
You just mentioned possession. Do developers actually make you run around for possession as well?
So very often what happens is that possession gets delayed and projects are completed not at the same time. So certain blocks of flats go to final completion, certain other blocks are still having the final coat of paint, yet the developers have sent out possession letters. So it becomes a problem for customers because they say that our flat is not ready, but the developer starts demanding the final payment to actually hand over the flats to them. So all these areas are an element of after booking or after sales service right at the time of possession. So one must make sure that the developer is aware of his responsibilities, get the assurances that he will complete the flat completely before asking them to take possession.
How do you actually assess that all of this will not happen? Again, is it just instinct when you go to the booking office, when you talk to their advisors, you get the sense whether you're talking to professional people at the developer's end or not? Do they have a call center which is taking your calls, or they may even dedicate actually a couple of after sales service executives to you, right? And all of these things must be now done by professional developers.
A lot of the things that developers are today doing is, earlier it was the site team or the construction team that would do the handover. Developers today are developing customer teams and sort of customer service departments that handhold the customer all the way down till the possession. So one of the important things to assess is, does the developer I'm working with have a customer service team? And once you get a sense that the customer service team is available and responsive, you can be quite comfortable that the developer is thinking about fulfilling his responsibilities both at the time of construction as well as at the time of possession.
And what's your own experience with developers in India? How many do you find, ballpark percentage, who do have customer service teams dedicated and responsive?
So a lot of the market forces are today forcing almost all developers to get customer service teams. The new age developers, many of the newer professional ones, some of those that have international funds investing in them and are more progressive and more customer oriented, they have proper full-fledged customer service and after sales teams. Some of the older developers, entrenched developers who had a mindset from the past, they are today realizing that they have no choice.
I love what competition can do, isn't it, Samar?
I agree.
Samar, I just said the figures. 50% of India's household savings go into real estate, and it's quite evident from the viewers who call us in or write into us, they do want to make money in real estate. So how do you ensure that you're picking out a property which will give you returns which are more than inflation and not just a little bit more, but a lot more?
There are a couple of rules, Manisha, to follow, and these rules don't just hold for any market in India. They hold for buying real estate all over India. Surprisingly, they hold for buying real estate anywhere in the world. So when you're talking about Indians investing in real estate, all the wealthiest people in the world, you will find that their assets either have been created by real estate or currently in real estate. The rules are, first of all, you must always buy and hold. And that is very important because people end up trading and doing short term, up and down and looking at investments. So buying and holding is very important. People can think of a lot of reasons not to buy, but if they hold out long enough to outdo a cycle, they will always end up making a lot of money, especially in a country that's growing like India is at the GDP growth rates that we have. So the first rule is to buy